Commercial Construction Coffee Talk fans. Thanks for chiming in. My name's David Corson. I'm your host. I'm also the publisher and editor of Commercial Construction Renovation magazine. Those are my covers. Some of you know what it looks like. Anyway, hope everybody had a great week. Olympics are finishing up. USA's out of the hockey tournament. Men lost in the quarterfinals. Yuck, in overtime in a shootout. Yeah, they should have won that game. And the ladies, nice effort last night, but Canada beat them 4-1. Canadians had a great team. So, look, nothing wrong with getting the silver. We'll take it. But anyway, I would have liked to seen, Canada and the U.S. in the finals. But listen, you can't win them all. So anyway, got a really special gig here tonight. People come with me with these ideas and they throw them at me, new products and so forth. And up in the right corner, which I don't know what it's looking like on your screen, I have Mr. Peter Cola, and he's an author. And I had him on one of my podcasts, I don't know, it's been maybe 6 months ago or so, and thoroughly enjoyed the conversation. And he came into me and he said, hey, you got to check this thing out. This is right up your alley. And I think a lot of your guests would like to hear, about this program that's out there that probably a lot of people don't know about. And, I'm a skeptic. I always like checking out things. I don't, I just like, listen, I don't believe, I do research, and then I kind of decide what I like and what I don't like, and so Peter came to me and said, hey, you got to have these people on. So I've got Ken and Debbie, and I think they're on the bottom of my screen. There were tax incentives. Say hi. Ken and Debbie. Peter, say hi too.
Yep. Hello.
Hello.
And this is kind of a PSA, podcast. We're just going to have a short discussion, and they're going to present a new product that's out there. And a lot of people did the PPP, and they took advantage of it. It was very cumbersome for a lot of people to have to do paperwork and this and that and trying to get approved and not approved. And listen, I know all have your own thoughts about how that program worked, but Ken and Debbie actually have a very cool thing that I didn't really know even existed until Peter told me about it. And then after we talked, I said, yeah, look, we'll put them on the show. So Ken, Debbie, tell us what your program is, and it has to do with kind of like the PPP that's out there, and but it's got a different kind of slant because there's not a forgiveness. It's actually tax-free funds that you can get from the government that's been sitting there. No one knows about that. It doesn't matter. The government has some money here, and if we don't spend it, you lose it. So. Right. Just like your own budgets. If you don't spend it, you don't get it for the next year. So anyway, with that said, I'm going to let Ken and Debbie take it from here and tell us, our audience, about your program.
Okay. So thanks, David. I appreciate it. And Peter, definitely thank you for connecting us with David. So I'm Ken. I'm the CEO of Tax Incentive Agency. Debbie Merrick is one of our national advisors. She handles a lot of our national accounts. So we are a tax incentive, basically, I would say a recovery agency. We have CPAs and enrolled agents that work with us. They handle the program. So in a nutshell, the ERTC program is part of the CARES Act of 2020. That's where it all stems from. It goes back to the CARES Act, which, like you said, David, had the PPP. It also had the EIDL program. But when the CARES Act was first released, the company owners had a choice between taking a PPP loan or taking the ERTC, Employee Retention Tax Credit. If they took a PPP, they weren't eligible to apply for the ERTC program. So like you're saying, it's kind of a new program that you're thinking, like, what's this new program? And it's actually been around for the same amount of time as the PPP has. The biggest issue with this program is it's underwritten by the IRS. So it is a little bit more of an in-depth program. It's a little bit lengthier for people to qualify. Back in that time when it first came out, March of 2020, the process was a little bit more difficult. And for the entitlement that you would get for it, it was deposited through your payroll system. So even though you got it, you had to wait for it to get divvied out through your payroll. Whereas the PPP loan, like everybody knows, everybody went crazy with it because one, it was easier, it was faster, it was underwritten by the SBA. Two, you got yourself a lump sum check right up front for a big amount. And everybody knows I'll take all the money right now so that I can do something with it rather than waiting for things to trickle down. So people wanted to be a little bit more in control of the funds as they got them. So when that happened, the ERTC basically was restricted. Everybody went towards the PPP side, and the ERTC program just lost momentum, totally blown out of the water. So it was pretty suppressed. Nobody knew about it. Nobody paid attention to it. All the accountants and CPAs that work general taxes, helping their business owners do what they do best, checking the numbers. They just remember the original guideline. And one of the original guidelines for the ERTC program was that you had to lose 20% of your gross receipts in 2020 versus your 2019 gross receipts. So that was like 50%. So that's a huge drop. So not very many companies qualified for it to begin with, let alone not wanting to deal with the IRS. But in 2020, when they threw it out for an extra year, you had to lose 20% by quarter to qualify per quarter. Whereas the PPP loan, if you had a drop of 20% in Q4 of 2020, you qualified for second round PPP in 2021. So again, a lot easier process with the PPP, so nobody went towards the ERTC side of the house. Well, the biggest issues with the ERTC, besides the fact that you had to have 50% losses of your revenue in 2020 or 20% in a quarter of 21, is, of course, what happens if I don't qualify? All that money is earmarked. And this was like an $80 billion earmarking for this program. But the biggest hidden benefit behind everything with it is the claim itself is non-taxable. It's not earmarked for yourself. Like the PPP was earmarked to use for your wages. You paid your company wages, business services, business related. This money for the ERTC, there is no limitations for it. You do not have to use it for your wages, for your business marketing, service expenses. Business owners literally can deposit it and it becomes their own. They can write it right back to themselves. So you can use it however you want to. There's no guidance on how you can spend this. So it's a huge program. It's a massive program. And you can look at it. You can go to the irs.gov website and type in employee retention tax credit. And there's pages and pages and pages about the program. Yeah. And it's been so revised. Congress realized, like you said too, David, the PPP aspect of everything was just kind of shoddy. It was like, what's going on? I went through this process. The bank didn't want to give it to me. Another bank gave it to me. And then they had me jumping through hoops. We were talking about this earlier. This program was not being obtained because nobody was really hitting the 50% losses or the 20% losses. And so what happened is Congress had to make a revision. And the revision was, well, anybody who took a PPP loan, because we got to get rid of this money, it's already there, it's allocated. We're going to now open this program up for every business that took a PPP loan. They can now apply for the ERTC program. So that was a massive revision that happened. Still, to that portion, not a lot of people qualified. So what happened is another revision happened that Congress passed, and that was if your business was hindered for the pandemic, okay, they would actually let you qualify based off of if you had salespeople that needed to travel to go meet with your clients and there was nobody flying, the airlines were grounded, nobody was going anywhere. They couldn't go and they couldn't get more business for you. If you needed to hire new sales reps, you couldn't personally train them face to face, in an environment because everything was social distance.
Basically, everybody qualified.
Oh yeah, it was crazy. I mean, yeah. And so with that mandate, it opened up everybody. I mean, restaurants. You think about it. Every single restaurant qualifies because their dining areas were shut down. So part of that mandate was full or partial shutdowns. A shutdown meaning restaurants shut down their indoor dining. Now we have restaurants that doubled and tripled their revenue, But because of the shutdown portion, they qualify for the money now. Even though they incrementally came back up 30, 50, 70, 90, 100%, but they had the shutdown. So during those time periods that they were shut down and not able to use their indoor dining area, they qualified during all those periods. Okay. And construction, you talk about construction. I'm sure a huge portion of your audience is construction. Massive credits, because what happened with construction companies? Limited supplies. You couldn't get materials fast enough. Manufacturers of certain products that construction companies needed to do the jobs were behind because the manufacturer shut down. And then when they reopened, it was limited quantities. And then the shipping was an issue. So they were affected. Their jobs.
Well, I'll tell you, in construction, the biggest thing was if you weren't considered essential and you were in a lockdown state, that project wasn't happening.
Oh, yeah.
Or workers weren't allowed to work.
I'm in Georgia, so we were an open state, but if you were in Pennsylvania, nothing against PA. I'm from Philly. I'm from there.
Oh, my dad's from Philly
If you were from Pennsylvania and you had, if you had a federal highway project and it was outside, you're okay. But if you were doing an inside project and you were doing a restroom or something, you weren't going to be able to do it because the restrictions were ridiculous. You couldn't get the job done.
Huge. Indoor remodelers, because you figure, even I know it's commercial is what you say on your
and the medical people. Don't forget about the medical people.
Right.
Oh yeah.
Yes.
Don't forget the medical people.
Enormous, because you talk about the medical side of the house. When it comes to the mandate portion, it's limited distancing, limited capacity, limited seating, which also limits because you have to now spray everything, sanitize everything between patients. That's a prolonged period, and that pushes out scheduling. So if a doctor used to be able to handle 50 clients in a day, and now he's got to sanitize between everybody, plus temperature check and then get them in, now he's dropped down to maybe 40 a day, if that. And so that portion of the mandate opens it up to everybody. Everybody was hit.
No, listen, I was hit. I was print face to face. I did my event, my 10th anniversary in Jacksonville. I did my first cocktail party down in Florida, Coconut Grove. I was in Milwaukee the second week when everything got shut down. And normally I would send out contracts for my event. I couldn't send them out because I didn't know what was going to happen.
Right.
The hotel, I had to get the CDC guidelines added to all the contracts. Everybody was building. Am I going to be liable if someone comes on the construction site? They go home, they get sick. If someone dies, who's going to be? I mean, you should have heard some of the conversations that was going on in those first 6 months, whether you were an engineer, a contractor, an architect, if you were the end user. I just had this conversation today or yesterday. A couple of people reached out to me. When are you going to bring your in-person events back? And I said, you know what? The liability is just not worth it to me, because if someone gets sick, and they come to my event and they get sick and they maybe there's other complications, but the hospitals are getting paid. I hear $100,000 if they pass and whatever. And God, I feel terrible that stuff happens. But if someone happens and they're at my event, I'm liable. And do I want to have everybody sign a waiver to come to a 2-hour cocktail party? No. No. And so it's just not worth it to me to go until all this stuff is kind of settled down and gets through it. So my whole company, I went from print face to face to digital. I'm not even the same company, but I kind of like my company the way it is now. But I still.
Well, what Ken can explain is what each company can expect now moving forward from the program.
Sure.
He actually has the dollars amount per person.
Yes, that's the part that everybody wants to hear.
That's the big beneficial portion of it. So the entitlement portion of the program is pretty amazing. Not even the fact that the claim itself is non-taxable, but the fact of the claim amounts, because there's 2 types of claim amounts. So in 2020, a business owner can get a maximum of $5,000 per employee for that 2020 year. Okay. The IRS guideline is they cap it at a $10,000 earning. So even if your employee made $10,000, $20,000, $30,000 in that year, we still bring it down to $10,000 as a maximum. you get 50% of that $10,000. So you get $5,000 per employee. Any employee that made under 10 grand, 5,000 or 50% of that is what you get. Now, I'm giving you maximums. We don't obviously have calculations and calculating hours and everything else, plus backing out PPP loan amounts, but that's the basis, 50% or $5,000 as a maximum per employee, okay? In 2021, it changed. In 2021, it's broken down into 3 quarters, Q1, 2, and 3. And now instead of 50%, you get 70%. So if you have an employee that makes $10,000 in a quarter, it's a $7,000 entitlement per employee. And you got 3 quarters to qualify. So you have a maximum of $21,000 per employee for 2021 that you can go after, and a maximum of $5,000 per employee for 2020 that you can go after. So you can see 2021 is where you want the qualifications. I mean, it's big money, you know, and we process, I mean, we help everybody, you know, we're not one of those big firms that's just going to try to stay, like, we only want to work with 20 employee companies or more.
2 to 500 employees.
Yeah, you can go up to 500 employees for 2021. 2020 was capped at 100 employees, but then there are a little bit of movements in there because they go off of full-time employees. So if you have maybe a portion of full-timers, but you have a ton of part-timers that are coming and going, you might still qualify even if you threw out 150, 160 W-2s in 2020. There still is possible ways to qualify. So there's that portion of it. So, but like I said, we're helping everybody from, you know, the minimum qualification is you got to have at least 2 W-2 paid employees. This is a W-2 paid program, no 1099s. We do help nonprofit agencies as well, as long as they're paying by W-2. And as long as you have 2 W-2 paid employees that are non-owner, non-spouse, and non-owner's child, everybody else qualifies. Okay, everybody qualifies. Every other employee that you have qualifies as part of your.
I have a question, Ken. What about illegals or those kind of people?
Well, this is purely based on payroll reports. So if that company is hiring somebody, they're obviously, if they're on payroll, more than likely they have social security numbers because they're on W-2 payroll. So we only go off of the W-2 payroll reports. We don't take in consideration anything else but that.
Listen, I'm all about helping everybody.
Yeah,
there's
we're
still
saving businesses right now. We're saving them.
Yeah,
We're helping
there's still
them.
businesses
That's
that
what the
need
name
help
of this
out there.
program is, Save the American Business.
Yeah, so I just figured that, you know, I would have this little discussion out there, and you know that, you know, for people that are interested to find out more about it. I didn't know about it. You know, I knew about PPP. I went through the rigmarole. I understood the concept. You know, I'm gonna, you know, ask my CPA if he knows about it. You know, but I figured I'd throw it out there.
Ken's going to provide a link, and then the people will connect on the link, and that will answer their questions. And then after that, if they like what they see, they will just they will submit their information. So for a contact, to get a contact phone call, one phone call, and they'll be able to sign on. The paperwork will be filled in, and it will be submitted. And so it's a very easy process. As a matter of fact, it can literally be processed in a day, in a single day or two.
What's the turnaround time for funds to be distributed? Like, you know, if you get approved, I assume it goes into your business checking account, correct?
No, it actually, these come in treasury checks.
Treasury checks, okay.
Right, yeah, and you know, the turnaround side for funding is the sore subject of everything, because because we're dealing with the IRS on this product, and so like Peter said, it's very easy for us to deal with a business customer that already has most of the documentation there. If they've taken PPP loans, they've already got 941s, payroll reports, all that good stuff ready, and so we can literally get documents from a customer in one day if they have the time and they have everything prepared. We can typically do the turnaround time and the calculations and research and build that file in about a day, 2 days, maybe max. Depends on how many employees, you know, we're dealing with on a file. But that's as fast as we can go between the two entities, you know, the customer and us. The issue is the IRS, because we can overnight the file to the IRS. At that point, they need to receipt it, they need to scan it into their system, and then it goes into their queue, which any IRS office can pull from and work the files, on a next in line basis. But right now, it is a 4 to 6 month wait time for the IRS to get to these files because they're 25%
To actually
underpaid.
submit a check.
What's that?
That's to submit a check, 4 to 6 months.
That's for the IRS to get to the file, open it up, verify the paperwork is done correctly, stamp it, close, and then generate the treasury checks back to the customer.
My CPA said, don't send the IRS any paper stuff because they're not all working, and they moved the headquarters, and that anything that you want to do it digitally with them. And because it's just going to sit in the corner someplace until they get to it. And I sold my house and I moved it. I changed my address 8 months ago, and they finally just sent me a letter. It said, "Oh, we changed your address," and I'm like, "Oh my god, I sent that to them almost a year ago."
You could have moved again.
Yeah. Well, I'm building my house. I am gonna move again here.
Are you?
Once I finish my
There you
house.
go.
I was like, "Oh my god, look at this! I did this thing like it. I don't know. This has been like a year, and they're just sending it to me." My CPA is
is
Like anything
"Listen,
else, you
Yeah.
submit for a tax return. You don't get, some people have to wait a long time before that tax return check comes. You just have to, they're used to that.
Right. Yeah.
Oh, this year is going to be the worst. They're already talking that tax returns, if you get a return back this year, you might not see the money until 2023.
Yeah, well, I
Yeah.
normally have to write a check, so it's
Yeah.
which is listen. We make money, you got to pay tax. That's a good thing. So,
Right.
but even then, I do it.
Mhm.
Digitally. We do it that way, and then my CPA sets it up so if I owe money, they just take it out of my bank account.
Mhm.
Because if
Yeah.
you do it in the mail, you're dealing with the post office, which once again is not. They're delayed.
Right.
And you never know what's going to happen there, even with a tracker. And
Yeah.
I
The
just
good
had
news
this
is
conversation.
if we get our submissions in, they're still in order. And right now the fund is completely open, $75 billion. So the faster people get theirs in, they're first in line. It might take 6 months for them to get paid, but they're still first in line. And so over the course, if people are submitting 4 months from now, by the time
we
they're
don't
4
know.
months down the line, those funds will be, and then add 6 months under that, they will be exhausted. But at least the people that are getting in now, we know that the funds are there. So the minute they submit, it's actually earmarked. It may not be processed, but at least it's earmarked for that they received it, right?
Right.
They
Yeah, it's in
do
their
have
system.
you have a
Yeah.
receipt that they got that's why they digitally send it and they send it. I mean, they mail send it so that they have a written record when it was received.
Yeah, we put tracking on every package, so we know that they received it.
So here's what I think I'm going to do. I'll put this up, and I'll have a link so anybody can review this.
Mhm.
And then if they had any questions, and listen, I'm not the expert. I'm just the messenger here, guys. So
Right. Yeah.
I don't know what your
Yeah.
situation is, but
Yeah.
here's a program that the government has for you that's out there. It might take a little time, if you qualify and you fill the paperwork out right, and and if so, it's there. And
Exactly.
and I took it from that. You don't even have to go through the forgiveness or any of that. Am I
Nope.
correct?
Not alone. Not
It's
alone.
done. If you get in and you get approved, it's money and it's yours. And
So before we go, I just would like for Ken to tell about a specific client that we had in Texas that was a very specific situation that a lot of your listeners might be very interested in.
The irrigation company, is that the one you're
Yes.
talking about? Okay.
Yeah.
So construction company. And I was going to touch on that too with you, David, because you brought up a statement that you said a little while ago, and that was, let me, when I'm done here, let me get with my CPA and find out more about this program. And that's I think that's probably one of the bigger battles that we fight on our side of the house, because we're a specialist. You know, our enrolled agents and CPAs are, you know, they take seminars and extra education and testing and everything, you know, for this program. That's what, you know, we do R&D tax credits and SALT credits and empowerment zone incentives. You know, we handle the crazy stuff that the IRS has out there. And this program is one of those crazy things. And your typical CPA or accountant, they take a look at the initial guidelines when they came out and they say, David, you don't qualify. You didn't have a 50% drop or a 20% drop, so you don't qualify. Well, he talked about something about a mandate. There was something that was there. Oh yeah, that's if you had a full or partial shutdown. Your business wasn't full or partially shut down. They go off of the black and white when Congress left this mandate in place as an interpretation point. There's no way possible that they can interpret what a mandate would cause for your business versus my business versus Peter's business versus Debbie's business or a marketing company, restaurant, construction, chiropractor, dentist. There's no way possible. And so it's a complete, you know, interpretation clause. The biggest issue that we see, and we only run into it with maybe 1 or 2 out of 50 clients, is they'll send the information to us and they say, look, my CPA said I don't qualify, but since you guys are going to run the research for me complimentary up front and let me know what I qualify for, I'm willing to give you the documentation and then go from there. And then what happens is we'll get them a certain amount of money, you know, sometimes crazy amounts of money, you know, 100 grand, 200 grand, 700 grand, whatever. And then what they do is they take that back to their CPA and say, hey, look, they qualified me for this much money. And the CPA says, don't do it. Why? You don't really qualify for it. Well, they just said that I do. No, I read the guideline, you don't. We have had to send multiple emails back and show their CPA the new guidelines, the new interpretations. Here's where it is, almost to the point where they want us to send them the entire calculation by quarter, just so the CPA can take it, fill out the 941s and send it in ahead of us, you know, and it cuts us out of there. And we're the specialists. And it's unfortunate for most business owners that they, you know, and it's not unfortunate that they trust them that much because they trust, you know, they're doing your taxes.
Precedented. This has never happened before. So how can somebody make a recommendation when, unless they're working with it every single day, like our people are, you couldn't.
Right, right. And you know, it goes back to the too good to be true statement. This is too good to be true of a program. Well, the cell phone was too good to be true. The internet was too good to be true. The iPod was too good to be true. And after it finally comes out, it's too late. It's already there. And this is one of those programs where, unfortunately, there is a timeline and there is a limited amount of money. Mm-hmm. So it is the fear of missing out for most people. And it's the risk versus reward in some people's eyes.
Right.
You know, we have had probably a good handful of customers that we get them back maybe $500,000 in the claim, and they say, well, my CPA is saying I shouldn't send it in because it's not real. And we're saying, yeah, you should, because you do qualify. And here's where it really comes down to. It comes down to the risk versus reward for the business owner, quite honestly. It's nice to trust your CPA.
Small percentage of people that actually do that, though. I mean, it's only a fraction.
Yeah, no. I mean, it's maybe like a couple percent. I mean, I think maybe we've lost to date. We've only lost maybe 3 deals out of a few hundred that they chose to go with what their CPA said. And some were small, some were big deals. But like Debbie was alluding to the person in Dallas. You know, I was giving her contact information. She had a big construction irrigation company in there. And she says, yeah, I checked with my accountant and everybody says I don't qualify. And so we took a look at the numbers. And then what happened is we found that she did have a drop because of the big Texas ice storms that happened, you know, last year in 2021. You know, that big corridor of ice storms that shut everything down and blacked out everything. nobody was working for a month and a half to 2 months, and their revenue plummeted just for that period. And it's things like that that get overlooked, and we find that because we look at it on a daily basis. And here we are now, she's got, a $2.5 million claim.
Mhm.
So,
Did she ever submit it? Was it ever submitted?
oh yeah, we submitted it.
Yeah.
Yeah,
Okay.
yeah.
She's
she was,
happy.
You
she's
finally
one of
very
talked
those.
her into it.
Yeah, she's one of those that says, you know what, let's move forward, because what's the worst that could happen? I'm not in a bad position. My company does very well. So if I get this $2.5 million and I know that this program has a chance of being audited, is it ever going to happen? Probably not, because the IRS is so backlogged with everything else. But she's like, I'm going to put the money in an account, or I'm going to invest it in some property, or whatever the case is. So I'm always going to be liquid on it. If they come back to me and say, well, you don't really qualify for Q3, but you can keep all the rest of it, we just want this quarter back. She's like, okay, here's the money. Thank you very much. At least she took everything that she can, because she's claiming her entitlement, because that's her right as a business owner in the United States for this program.
Yep.
Well, here's my thought to everybody out there. Look, you got to make your own decision on what you're
Sure.
going to do. I'm
Yep.
just doing a PSA here. I'll put this up. I'll have a link there, and if you're interested, you can, you know how to reach me. Most of you, my contacts and those up on my website, ccr-mag.com. I'm throwing it out there. I'm going to look at it, and listen, when opportunity knocks, you should always look at it. Look, God knows I've given the federal government gobs of money for all these years. If there's something that's available there that I could get a little back, and God knows I sure as hell probably deserve it. That it's worth looking at. You can make your own decision. That's what's great about America. You have a choice.
That's
right.
right.
And David, we can
You
do
have a choice to
follow-up,
buy a lottery ticket.
We can do a
Don't buy a
follow-up
lottery
visit.
ticket. You can't buy them. You can't win. I say that all the time. I say that on this podcast. But if you go through the paperwork, if you did PPP, you probably have a lot of this paperwork. Send it in. Let these professionals that deal with it every day see if you qualify, and if you do, what's the worst that can happen? They say
Then they're going to take you to lunch, David. They're going to take you
Lunch.
your
They better buy a
clients.
freaking,
Your clients are going to be
buy a farm.
run
happy
some
with
ads
you.
in the magazine. Do
I
a
know.
sponsor on my newsletter.
Exactly. That's what.
I like looking at stuff. When stuff
Right?
comes up, I'm
We
like,
all
hey,
do.
why
We're
should
all
I keep
business
this to
owners.
myself?
Yeah.
I could help some other people.
Yep.
And
That's
God knows,
right.
I know that there's been a ton of restaurants that have been crushed.
Oh,
Ton of,
amazing.
just right now, listen, a lot of people are very busy. They can't, but when this whole thing went down,
Oh,
my God, some of the
crazy.
conversations I had, it was, people were like, it was really, really tough.
We feel like Santa Claus, because every time we get to call the client back and tell them how much money we found them, we have happy tears. And it's just so amazing, because some of these people are in what I would call quiet desperation. They're very outwardly, they seem like everything's okay, but they've been through a lot. And so
Hey, I look at it right now as like, this is if you were buying a Tesla, you're gonna have to wait a year to get it. Okay.
There you go.
Or if you wanted to get an
Yeah.
F-150 Lightning that's all electric and got the generator, they can't get chips for it. You're gonna wait a year for it, but you're still gonna order it, and you're gonna wait patiently for it. So
Yeah. And they're
this is the way
replacing
you have to look at it.
their entire salary for 2000, or at least a lot of it, for 2021. My God, that's huge.
Right. And
No,
perfect point there, David. Perfect point. You got to wait for the chip to come, which means that every single new car dealership in the country qualifies because they were hindered by the mandate.
Yeah, my son just came in and bought a used F-150, and he but on the lot there was only a handful of new cars. The rest of them were all used. He bought a used 2018, got a great deal, and I'm driving my 2015 paid off F-150, and they were like, it only had minimum miles. Like, hey, Mr. Corson, we'll offer you this. You can have that Lariat over there. You know, I'm like, no, I'm keep, you know, I want the generator and the lightning, but I don't want to buy it when it's new because I want to let the bugs get bugged out of it, and then I'll probably buy it, you know. But you know, just like, listen, guys, I just bought 3 months of dry food just to have at the house because of all this stuff that's happening right now.
Right.
And I told my wife, I said, look, I can have my son drive back from Charleston and we'll have food for, you know, if the electric goes out and, you know, all hell breaks loose or whatever, we'll
I
have
hope
about a
not.
month and a half worth of food. If they don't figure it out after a month and a half, we're all done for anyway.
That's
So,
right.
you know, and so I did it. It's good for 25 years. So I might not ever eat that food because it probably doesn't
Hope
taste
not.
good. She goes, it probably doesn't taste good. I'm like, do you want to eat dog or cat food or do you want to eat this food? She goes, I'm going to eat this food, you know? And so I just stuck it up in our storage room and I said, hey, it's there. If something happens, we have food. And I'm not a prepper, but I always pick up a case of water and this and that, so
Sure.
I can't, you know, and I'm more worried about my dogs. I told her today, I said, go order 4 bags of dog food. So we have it here in case, just to have it. Cause you know, and I have 5 dogs, you know, I don't.
Oh, wow. Yeah. You got to be prepared.
Well, she's a rescuer. So, you know, we got,
Yeah.
you know, they're like family, you know, and so
Oh.
here's my
A
message.
quick question, Ken. Do franchises, so let's say you have an AMC movie theater, but you're a franchise of a big company. Obviously, a big company doesn't qualify because they got hundreds of thousands of employees. But what about the small franchise owners? What about them?
Oh, definitely. And actually the parent franchise, the franchisor actually qualifies a lot too, because most of the time they're just indoor staff that's supportive, you know, they're supportive staff. But your franchise locations themselves, yeah, I mean, we're doing, you know, I'm flying out to Southern California Saturday. I'm speaking, you know, to a group of 7-Eleven franchise owners, you know, for Southern California. And they all qualify because they're a store. What happened to stores? They couldn't get supplies fast enough. They ran out. Plus, they had social distancing, limited capacities where they had to have somebody at the door waiting and letting people in one at a time. And so people just left. They drove away. Now, even though a store made a lot of money, they still lost business. It was something that they were hindered on. So yeah, 7-Elevens, you know, like I said, car dealerships. I just talked to a GM dealership in Mississippi yesterday. He never had one new car that came in for him to sell. Everything that was coming in was already ordered for the customer. And he wouldn't tell the customer that it was there for about 30 days or so because he wanted to seem like he had some new cars, but people would come in and he had droves of used cars. He had 45 employees. I think it was $500,000 or $600,000 claim for a new car dealership. So yeah, and we're working with daycare centers, you know, daycare centers that are franchised, coffee shops that are franchised. Debbie's, you know, got Hot Works, you know, yoga studios and
Schools,
stuff. It's
nonprofits,
minimal employees, but
No, I have a
churches.
franchisor coming on the cover. He asked me, he goes, hey, do you want the franchisor or the franchisee? I said, it doesn't matter. You know, I mean, you know, you can have, I'll take them both on the cover. They can talk about either
absolutely
side of it. There's still, it
all day
is
long.
what it is.
Right.
You know,
Yeah,
they're
even
still,
nonprofits.
Oh,
you know,
yeah.
they're not-
Schools and churches. We're working with like the Catholic Church. We're working with some other private.
The Catholic
schools.
Church. Holy mackerel, we can work just with them.
Yeah. I mean, absolutely. I mean, they have employees at the parish and at their school. And, you know, so I mean, it's just endless.
Yeah, we just did a Bible college down in North Carolina. I think it was North Carolina or Florida. You know, it was a couple $100,000, you know, for a nonprofit Bible college. That's awesome. You know, it's amazing.
So what's the name of the program again, just for my audience?
It is the Employee Retention Tax Credit.
Okay, so everybody remember that. And what I'm going to do is I'm going to post this up and I'm going to put a link on there. And if you have any questions, you guys up front know, you know, I'm at davidc.ccr-mag.com. You can ask me, but I'm going to refer you to these people. And but I'm going to look into the thing. And listen, you got nothing to lose. You know,
And refer
and
to your
listen,
friends, and
information's
refer to your
powerful.
friends.
You know, it's there. And if other people are taking advantage of it, you know,
Yeah, why not?
why not take advantage of it? Because there's a finite amount of money and every day it gets smaller.
Right.
Yeah.
So, and even if you have to wait and you get approved and you got to wait 6 months, hey, you know what? At least you know it's going to be coming. And
It's money in the bank. It's guaranteed.
100%.
so, and you know, listen, you know, hey, you hear all these things, but you know, listen, mate, you know, like I'm just learning about this today, and I said, you know what? I'll just put them on here, and
That's awesome. Thank you
we'll
so
throw it
much.
out there. Listen, you know me out there. I want everybody to get their stores back and keep people and getting employed and get off the government dole. You know, listen, if you got this money, it'd be great to give some of your employees, you know, that, you know, just through all the mental anguish of the last couple of years, maybe take everybody on a vacation or go on the cruise ships. They make some money. I mean, this could be a really good thing for a lot of people, but you have to go through the investigation and your own, you know, time to get things done. But, you know, timing is of the essence.
That's
Timing is
right.
everything in business, because if you
Awesome.
don't do it, you wait, you might miss the
That's
gig.
absolutely. That's why, you know, that's why I contacted you today and I said I needed to talk to you today. You know,
Yeah.
it's like, you know,
Let's
I
go.
couldn't even wait for Nino for 2 weeks. He's got
Peter,
2 weeks.
the
I'm
way
going
that
to be on
Peter-
Charlie Ward in 2 weeks. I'm going to be on the 14th. I can't wait for that. I had to do it today.
Yeah. Peter healed this person and she didn't know who to talk to and called Peter and said, hey, do this. And then Peter called me and said, hey, Dave, you got this
Yeah, he's
platform, put it
amazing.
on there. And I'm like, well, I don't know anything about it. My reputation's on the line. So I'm just learning about this here. So I'm throwing it out there. Right? If you guys think it's a, you know, whatever, I'm taking it all in and I'm keeping an open mind
Awesome.
about it.
Thank
You know?
you.
So anyway, I'm going to post this. I'm going to get this done. I'll put it up on LinkedIn tomorrow because my newsletter's not going out until next week, but I'll put that on there too. And if anybody has any questions, you can email me at davidc@ccr-mag.com and I can, you know, point you in the right direction. And, you know, if you did PPP, you still should have all your files. Go find them and you probably might have to fill up a few more pages and boom. And then you can go in and you can, you know, but you need 2 W-2s, right?
2 W-2 employees, non-owner, can't be an owner, can't be the owner's spouse, can't be owner's children. They are not counted as the W-2 employees.
Okay, there you go. There's one of the requirements. So, all right. Well, with that said, Kent, Debbie, say goodbye. And
Okay,
Peter,
thank
David, thank you so much.
Phoenix.
Appreciate it.
And you know, if you can help
Awesome.
everybody out there, you know,
Gotta let
hopefully we
people
can
know
do
about
that.
your podcast.
Yeah,
Definitely.
and we will see you next time on another issue, another episode of Commercial Construction Coffee Talk. And listen, have a great rest of 2022. It's going to get exciting. A lot of stuff coming down the pike, you know. So every day there's something new that happens, you know. So anyway, keep the faith, stay positive, and take a look. You got nothing to lose. And with that said, Peter, say goodbye out in Phoenix.
Yep. I'm saying
Kent,
goodbye.
Debbie, where you guys are down
I'm
in
in
Florida,
Phoenix
right?
too. I'm
You're
in Phoenix too.
Kent's down in Florida, right?
No, I'm in San Antonio, Texas.
You're in Texas. You're down in Texas. Okay. So, and I'm in Georgia.
Woo-hoo.
So, with that said, everybody have a great rest of the year. And
All right.
we'll
Take care.
talk
Thank
Thanks.
you.
Thank you, David.
All
Appreciate
right.
it.
All right, we'll see you
Bye-bye.
later.
Bye.